Good morning, ladies and gentlemen. My name is Ryan Suter. I'm one of the senior investment managers here at Sharewise. And I'm here today with Joseph Oliver. Now, Joseph is the managing director of Delorean Corporation. He's been kind enough this morning to lend us his time and expertise regarding Delorean. Thank you very much, Joe. I might just pass it over to you, mate. Give us a bit of an update on Delorean, how it's going.
Yeah, thanks for the intro, Ryan. I'll just share my screen so that you can see the presentation. If you let me know that you can see that, that would be greatly appreciated.
Yep, I can see that one, mate. Thank you.
Excellent. So welcome, everyone. I'm Joseph Oliver. I'm one of the co-founders and managing directors of Delorean Corporation. So we're catalysing the bioenergy sector here in Australia and New Zealand. I'm going to step through a couple of slides that we've previously put out. Let me just see that it goes into the next one. So a bit about Delorean Corporation. We are the only build, own, operate developer in Australia in the bioenergy sector. Our focus is delivering mature technology across the changing landscape that we're seeing around waste and energy. And our focus is supplying waste or diverting waste from landfill into our facilities, into our infrastructure that will generate energy. And we're seeing the strong tailwinds around green gas is the focus for us. So I'll slip through a bit about Delorean. So Delorean, we've got a 12-year track record in the industry. We've delivered 3 out of the 5, and we're in build for the 4th, which is the largest facility in Australia to date. So across that side, we've delivered most of the projects here in Australia, and we've got over 50 years experience across our team, and we're really well positioned in addition to this transition that we're facing into a build, own, operate model. So we've done a lot of EPC contracts that falls under our engineering division, as you can see in the bottom left. That's built the IP, it's built the experience, it's built the track record. In our infrastructure division, we've built out a pipeline of projects nationally to underpin our infrastructure side, but also utilise the learnings, the IP, the Australian context of this mature technology, which is bioenergy or anaerobic digestion. And then our third side is an energy retail division that enables us to retail energy nationally, both in the form of gas and electric. So we've got our gas licenses at Victoria and our electricity licenses nationally. So across our EPC division, we've got $54 million of contracted works, and that's the closeout of the Yarra Valley Water facility that we're building in Victoria for a tier 1. In addition to the internal works that we've got with the SA1 project that we've now recently secured. And across that, we've had 0 lost time incidents and accidents across the site. So we're really proud of our safety records and achievements across the business. The EPC side has, as I've highlighted, delivered 3 out of the 5, and it's in build with the largest facility as well. So with that track record, the focus for us as a business is to transition into build, own, operate, and utilize the know-how. It's a natural progression for the business, and it's something that we've been working on for the past few years. The $30 million Tanara facility has really enabled the 100% ownership of our projects. And what we're seeing with our projects is we've got multiple revenue streams that really make it an attractive proposition from an IRR perspective. So we're utilizing our in-house team to deliver a pipeline of projects that we've got nationally across the sector. So we're really driving that forward. And the main reason for that is we're seeing the 2 key thematics, which is around waste and energy. So in the waste side, because we've got control over what's coming into the plant, we're focused on diverting organics from landfill that attracts environment credits, and it's not subject to the landfill levy, which is increasing, as we can see in this graph on the right-hand side, year on year. Across the bottom, because we're able to break the volatile matter down for energy production in the form of biogas and upgrade that into natural gas or also consume it into electricity, what we're seeing across the States is a real driver to go green. So driving effectively 100% by 2027 with the South Australia state, which is where our first project as a build own operator will be commenced from. So a couple of highlights for FY24. We've really focused on building up the momentum around the corporate financing package that we'll touch on shortly. We've achieved a 5 million plus EBITDA, and we've got 8.8 million of cash in the bank as of the end of June. We've had a record impact for the year, and we continue to progress our pipeline, both SA1 Vic1 and the collaboration, the joint venture that we've got with Brickworks, moving that through the development approval process. Across there, we've seen an uplift in revenue from 20 mil to just short of 28 million. In addition to the gross profit side, previous years we've pushed through a difficult period with COVID and post-COVID that where the contracts were struck in that period that we've successfully completed and put behind us, which has led us back into a profitable position across the business. So an EBITDA just north of 5 million and an NPAT of 4.7, 4.8 million across the group. As we transition to build own operator, we recognise that this is a real focus on driving annuity-based revenue streams as opposed to construction or retail-based revenue streams. So for us as a business, it's a natural progression and transgression into the build own operate. And we've got a strategic objective to drive the business value to north of 300 million based on what we've got in our current pipeline of activity by 2028. And the main reason for that is when we look at infrastructure ownership, yes, we see a higher multiple than what we see in the construction side, but we also see higher revenue streams. So everything from organic waste diverted from landfill, attracting, effectively getting paid for our fuel, through to the green credentials, the ACCUs that we generate, the LGCs, the RGGOs, so the environmental credits that are generated from that renewable energy that we're able to sell into the network as well. And we are currently seeing or experiencing a bit of an energy crisis nationally around the cost of energy starting to lift there. When we look at that, we see further upside. So whilst we're seeing really healthy project returns, certainly north of 15% to 20% IRRs, when we add in the additional upside of biofertilizer in addition to a biogenic CO2, we're seeing 25 to 30% IRRs. So this is really supporting healthy project returns across a new sector where there's only 5 commercial facilities and Delorean's built 3 of them. So the transition is really clear. The progression utilizing our IP, our technology, and the systems is evident from delivering projects in the past, award-winning facilities. So when we look at our pipeline of projects nationally, we've brought the short-term projects through, which is South Australia 1 and Vic 1, which we have supported with the Tanara funding piece, and the focus is around the SA1 project. We've got behind that New South Wales, Queensland and WA2 that further support 5 projects nationally that are in either shovel ready or in construction through to development. And then behind that, a further 9 plus projects in a longer term seed capital path that we're really working through. So how we're doing that is we recognise currently we've got a low balance sheet. Our market cap is around 20 to 25 million. We've got big aspirations. We've always had big aspirations, and infrastructure ownership is key to that. So we're able to debt finance these facilities by securing the offtakes, the revenue streams that flow into that, which requires less of a need from an equity perspective, but enables us to do a development debt into asset refinance at a cheaper rate. So our current focus is we set up our SPVs, our special purpose vehicles, around SA1, VIC1, New South Wales, Queensland. We complete the seed capital that's required for getting them to a point where they're shovel ready. And then we set up a compartment and we structure a blended finance approach to deliver that. That's all being delivered by Delorean Corporation from our engineering division, our infrastructure division, and our retail division. So we're an in-house build, own, operate, and that's our unique selling point as a business, and only ASX listed stock that is doing that in this sector. So that the Tanara facility is a 3-year term. It's a 30 million quantum. We're bringing the capital into the South Australia 1 project to move that project through. And we will then refinance that project, move capital around the project pipeline to act as equity into the SPVs whilst bringing further debt into the SPVs at a lower cost. So the Tanara facility is really the enabling facility that is structured around development debt that, whilst it's slightly higher, will be moved through the process, and we're building long asset life of project 25 plus year assets through that. So when we look at South Australia 1, our focus is processing 70,000 tonnes of waste, which generates around 210 TJs per annum of energy. That 210 TJs goes into the grid. We produce a small amount of electricity as well on site to offset, but we're also able to generate 7,000 tonnes of biogenic CO2, 40,000 tonnes of biofertilizer that can go out to the market, and other green certificates that flow through that. So for us, looking in the revenue streams based on the merchant style of the waste sector, that being an enabler, diverting organic waste from landfill, not subject to the landfill levy, enables a really clear path for us to capture that 70,000 tonnes of waste and generate energy from it, which is not currently being done. In VIC1, we've got a second project. The first stage is 54,000 tonnes with 0.8 of a meg of baseload, and we'll be able to generate, again, 120 TJs going up to 210 TJs with the second stage. So that project is in a regional area of Victoria. It's attracting agricultural waste streams that are in the area, and it's enabling the area to generate energy that can be put into the grid in the form of biogas, biomethane, and upgraded with the biogenic CO2 on the backside. We're expecting to move that into construction in the early part of next year, and we're working through the process of supporting that overlapping finance with the Tanara project as well, as previously highlighted. So we'll finish on this slide. The pathway for material shareholder uplift is, as we continue to build out our pipeline, as we transition from an EPC contractor with retail revenues as well, as we move into the infrastructure ownership, this is a genuine infrastructure play that we've got a pipeline that we're executing on. And we have the in-house capability to take that from a green or brownfield site all the way through to fully operating, as we have done with our third-party clients and what we've done in the current industry. So I really appreciate everybody's time. Thank you for making time, and I'm happy to answer questions. Back to you, Ryan.
Thank you very much, Joseph. Really appreciate your time and expertise this morning. Found that very, very interesting. Now, obviously, I've got a couple of questions to start us off with. This morning, if any participants would like me to ask a question that they've submitted, please do so through the Q&A function on Zoom. Now, I'll just get it started, Joseph. Now, you have to excuse my ignorance with the first question. Now, of my understanding with the processes scientifically that you guys undertake It's heavily reliant on anaerobic digestion. Can you just explore what that actually is?
Yeah, of course I can, Ryan. So anaerobic digestion is the biological breakdown of organic matter, basically. So it's the same as what our stomachs do, and it's a mechanical gut. And what we're doing is we're inputting organic waste or feedstock that has a biological breakdown that produces methane in the form of biogas that has 60% CH4 and 40% CO2.
Okay.
That product we're able to put into a generator, or we're able to split out the CO2 from the methane and get it to a renewable natural gas quality that we can put into the network as well. And it's 100% green. It's based on organic waste, so typical supermarket shelf waste,
Yep.
through the process and into energy.
Brilliant. Okay. Well, thank you for that clarification. Now, obviously, just moving on to a bit more of a focus on the company. When it comes to the main actual drivers of your technology, and when it comes to broader market uptake, what is most attractive to a prospective investor?
Yeah, so look, I think for us, we've got control of the inputs into our facility. We are we've got multiple revenue streams that flow from this. So we're not when the sun shines or the wind blows from a renewable source. We've got 5 different byproducts that enables us to have different energy drivers or revenue drivers, where in some cases we can take waste for $0 or for free, because we're getting value on the other side, which is the energy, the CO2, the biofertilizer. So what we're able to do is we're able to shape projects that have healthy returns based on multiple revenue streams. And we're able to be attractive in the marketplace where the geographical location is that, we're seeing, a huge volume, over 40 million tons of organic waste is in the Australian market. Currently, there's only 5 facilities that are processing commercial industrial waste for energy. There's other wastewater treatments, waste streams and others, but our focus is commercial industrial, building out a portfolio of projects nationally, a national rollout to process that organic waste into energy.
Okay, brilliant. Thank you for that one. Now, with the current bioenergy sector in Australia, honestly, I'm of the understanding that in Australia the sector is so far behind the rest of the world. Why is that?
Yeah, look, I think clear policy is lacking within Australia. There is support from a state and a federal level. What we see across in Europe is a feed-in tariff, which is grandfathered for 25 years, typically the life of the asset, which enables paying for feedstock in an agricultural sense. We don't have that policy here in Australia, and that's why we've only got a few operational facilities in Australia compared to the rest of the world that have got thousands of facilities nationally. So it's a mature technology. What we're doing is we're bringing it into the Australian context, and we're looking at multiple revenue streams that enables us to drive a healthy return from that.
Okay, thank you for that one. Now, just back to a scientific focus. Obviously, with some of the key byproducts being greenhouse gases and biogenic CO2, at the end of the day, obviously they're byproducts. How do you guys actively dispose of them or actively utilize them to further enhance revenue streams?
Yeah, great question. I think what we're seeing nationally is an energy shortage, a bit of an energy crisis is what we're moving into from a gas perspective and an electric perspective. I think that's well known within the industry. What we're doing is we're putting green gas into the network that, we could sell one molecule 100 times over. There's a huge amount of demand for green gas, more to decarbonize their people's energy consumption. So huge demand, but very little supply. We've only got one facility in Australia that is upgrading biogas to biomethane. So we're very far behind. The other source of gas would be hydrogen. And again, hydrogen is probably a good 10, 15 years behind and needs a complete change to infrastructure.
Yeah.
On the other side, we know that there's over 40 million tons of organic waste, so huge volume of waste. And what we're actually seeing is more waste being diverted from landfill as we do more segregation. So the capture of food organics, green organics, enables us to put that into these types of systems for energy production. And then on the backside, the biogenic CO2, typically CO2 is generated from gas or from LPG. What we're able to do is create a green CO2 that again would attract carbon credits that enables us to, in the energy shortfall, utilize CO2 that is widely used in everything from dry ice to soda to fire extinguishers and everything in between. So huge volume of requirement for both energy and waste that this plays a perfect role in.
Oh, brilliant. Well, thank you for that exploration for me, mate. Now, obviously, with you guys constructing your own projects, looking to be in the second quarter of 2025. Now, with that being funded, as well as having 8.8 mil on the balance sheet, do you see there need to be, a cap raise or further debt funding within the next kind of 2 to 3 years? Or, realistically, do you have enough funding on board to be able to kind of set yourself up for future profitability?
Yeah, good question, Ryan. I think, for us, aspirations are always, a lot bigger than what our current balance sheet is. So where we can bring support into our project pipeline, we would certainly explore that. There's quite a bit of seed capital needed for further pipeline, but our focus over the next 18 months is delivering the pipeline that we've got. And we're exploring what the options are around it.
Okay. All right. Awesome. Now, just the last one for me today regarding the stock price, right? Do you have any comments on its kind of, recent suppression, or where do you really see it traveling within the next kind of year and a half?
Yeah, look, I think every ASX stock would say that they're undervalued. Look, for us, our focus is, myself as one of the majority shareholders with my other co-founder, Hamish Jolly. Our focus is driving shareholder value and really showing that by delivering, basically. So last year has been a turnaround for us on the back of post-COVID, and the reality for us is to really keep the momentum flowing through, which we feel we've got a lot of good excitement that will follow with interesting announcements to come in the following months. But for me, I would always say it's a stock worth buying.
Yeah, brilliant. All right, thank you for that one, Joseph. Well, mate, before we wrap things up, is there anything you'd like to leave us with?
No, I'm happy to take any of the questions. We're here we're pioneering a sector, but we're driving this sector forward, and the results that we're starting to see is on the back of the work that myself and the team have put in, and it's great credit to the team for where we've got to today.
Well, brilliant. Thank you very much, ladies and gentlemen, for your time this morning, and thank you very much for your time and expertise, Joseph. Really appreciate it. Enjoy the rest of your day, guys. Cheers.
Thanks, Ryan.